Hi guys, welcome to honeystocks.com. Very special analysis here for you guys that are obviously based in the US. Happy Thanksgiving. And I've got a very special analysis for everybody for the next few days. I'm often asked, Sam, what's the difference between all your free social media content and perhaps the premium content that you provide your clients and subscribers? Well, I feel like now is probably as good a time as any to just share quite a lot of the charts that I have talked with my clients in my group over the last few days. I'm also going to show you some of the charts that I have made my group aware of. A lot of these are going to be actionable over the next few days, maybe a week or so, depending on how the market reacts come the end of the week, early next week. But there's a lot of charts here for you guys, so please grab a pen, grab a bit of paper, note down the ticker symbols, and hopefully this just helps you out in some way. Now, if this is your first time here, or maybe you're a veteran of my work, please pause the video, just make sure you're comfortable with that. Just basically says that this is not investment advice. Do your own due diligence and don't listen to a word I say. Now, I think the one thing that's apparent, even though the stock market has been on a rocket ship for the last 6 or 7 weeks, hopefully you guys have all made a lot of money. I pray that you're all doing very, very well, but the theme of my emails is some of you just can't get it right. You're still struggling despite the fact that the market has had a hell of a run over the last 6-7 weeks. So if you're in the camp of Mr. Cow here, then might want to stick around for a couple of minutes at the end. I'm registered with the CMT Association. Technical analysis is what I'm known around the world for. I'm working my way towards my chartered status at the moment, and you'll probably get from this that technical analysis is my thing. Now, we're also running a Black Friday promo, so at the end of this video, I'm going to show you a couple of things that you can do if you're somebody that struggles and you do want a bit of consistency. Maybe you want to just align yourself with a successful trading group. There's going to be a huge offer for you at the end of today's video. And as always, please do subscribe to the channel. It's growing, it's in its infancy. I think we're up to maybe 400, 500 subscribers or something. So yeah, feel free to check in with our work. So with that said, enough rambling on, let's get into the analysis. Now, first up, I just want to touch on the rotation graph. Now, I know that a lot of you like this rotation graph because it's not a standalone tool. It's not a tool that we would ever use to just definitively say we need to go into this area. But what it does allow us to do is really just peek behind the curtain of the major areas of the market and really get a gauge of what's moving, what we should maybe be looking to remove risk from, where we need to be looking for allocation. We want to be identifying the strongest stocks in the best areas, and this is a decent little tool that can help us. Now, we can see that cloud tech computing stocks are moving into the leading quadrant. We can see that energy is lagging, that there's clearly flow out of energy. There's a little bit of weakness that's being shown in semiconductors for the first time in a while. It's something that I'm keeping an eye on. It is over the longer term. It's absolutely been a leading performer this year, but this is something that I've got my eye on. We can see that payment processing companies are obviously doing well, and again, communication services are moving forward as well. So this is a cool little tool. I would urge those of you that maybe have decent software to see if your provider provides it. Super cool little tool. Now, this is the S&P 500. Now, I'm actually preparing a bit of work at the moment, and what this essentially is here, we've obviously had a breakout. We know the market's flying, as I've touched on. But what I've added here, and this is the weekly chart for the S&P 500, I've added a 30-period weekly moving average here, and we can see that when the market tends to get a little bit overextended, and when I talk about overextension, I'm talking about when price moves a certain distance away from these key levels where price tends to revert back to its mean. Now in this case, I'm using the 30 period moving average as the area that price is generally gravitating back towards, and we can see that whenever it gets really overextended, we tend to see these pullbacks. Likewise, when we get overbought conditions, again, we tend to get these sharp pullbacks. Now, over the last 10 years, we can see that this has happened on numerous occasions. Now, the point that I'm trying to make with this chart is, yes, we can appreciate the market when it's going up, but what a lot of you will struggle with is when to maybe get a little bit defensive. You might want to manage risk a little bit closer. And what I'm seeing here at the moment is we have overextension again. And like I said, technical analysis doesn't give us a crystal ball, but what it does is it allows us to identify patterns in the behavior of price, and this is exactly what we're seeing at the moment. We've got a bit of overextension. I think if we move into overbought conditions, which if the market moves again to the upside next week, I think we would firmly be in that camp, and we can see what happens with price. We do tend to get these pullbacks. Now, when we get these pullbacks, you'll see the headlines in CNBC, Bloomberg saying, the bull market's over and all that nonsense, but I very much view it as opportunity. So I don't know if any of you have maybe learned anything from that. Hopefully you've picked up something. I'm absolutely bullish on the market over the long term. There's no doubt about that. But I think what we can perhaps expect is perhaps mid-December, the seasonality effect may well take place. And I think with the overextension, it would be logical to me that we get a little bit of a pullback. But as always, I'm happy to be proven wrong in that one. Now, Russell 2000 has joined the breakout party. Very, very welcome. We've got healthcare has broken out. So healthcare is an area that you might want to focus on. We've got software, tech, as I touched on previously. It's broken out. This is not a bearish move for software tech names. This is an area that you want to be focusing on and doing a little bit of due diligence, and I've got plenty of charts for you today. I'm also watching financials quite closely. Again, it's not a bearish move for the market if financials are breaking out. The market, when it's moving and it's in its full bull swing, financials generally will join the party. The market doesn't tend to advance unless financials are going with it, and I think we're seeing bullish signs with financials at the moment. So let's get drilled down to the individual stocks. Now, like I said, a lot of these charts I have already provided my clients in my group with trade alerts on. However, a lot of them are hovering around areas of interest where you may want to consider new entries, compounding, whatever your chosen method for profiting from the markets is. So let's get into it. So Caterpillar is one of those that's obviously performing very, very well. I sent a trade alert out to my guys when we had a breakout down here, and it's obviously moving. Now, if you're in Caterpillar at the moment, I do see it moving towards 160. I think that's a logical target to aim for. If we get a breakout beyond that, that would be a further compound opportunity. But I think with any weakness that you have in Caterpillar at the moment, any pullbacks, I think for the time being, I think you could probably buy the dip. I don't think that's a controversial statement. Quite a few of my guys bought this dip down here, so it is starting to move. I ultimately do see it moving towards 160. Now, Starbucks has just broken out. Now, again, I sent a trade alert out to my guys on this 200 MA. It's been kind of hovering sideways for the last 2 weeks, but now it's broken out. Further positions have been scaled in, compounding, and it's off and running. So I do think $100 is a logical target here for Starbucks over the medium term. Okta, again, broken out recently. This is an example actually of what one of my trade alerts actually looks like. For those of you that are maybe interested, it's not a case that I talk about 20 charts and say, there's a trade alert. I'm very specific, and my guys get an email alert with this particular chart to say look guys, this is a chart you want to consider. So that's what one of my trade alerts actually looks like. But if you're in Okta, I think 140 is a logical area of interest. I think reevaluating your position once it gets to 140 would be wise. Again, that just seems logical. Nike, again, there's nothing bearish about the stock at the moment. Yes, we've had a pullback, but ultimately with trends, when we get these pullbacks, it offers opportunity, and that's exactly what's happened. I do hope to see this move towards 100, but I would be interested to see what happens around $97. I think around $97 might be an area where you might just want to just say, do you know what, let's reevaluate things. SPLK, one of my guys actually did very well on this and profit taking this on Friday last week. Now it's broken out again. Now what I would say is it does have the look of being a bit overextended at the moment. I think that's, just looking at the chart, that's a hell of a move. So if you're out there in SPLK, I wouldn't be jumping in on this. I think you would need to wait for some sort of pullback. I think anywhere around this area makes a lot of sense. And actually, I don't know where the price has gone here. Anyway, I'll let you guys figure that one out. I'll figure that out with my software later. AYX, again, this has been talked about in the community with my group. Bullish above $100, and it's off and running. I do think with obviously the cloud-based software tech names, I think again around 150 would be a logical target, with plenty of areas of interest on the way up. CyberArk CYBR, again, we've just broken out. We've had a little bit of a pullback. Like I said, oftentimes pullbacks represent opportunity, and I think for me, I'm absolutely bullish on CYBR at the moment. I think this makes a lot of sense, having a stop maybe around here, but you're getting around 5 to 1 on your money, and we're all about risk to reward propositions at honeystocks.com. So I think CYBR, if it's not a stock that's on your radar, I think it's one that probably should be. EHTH has broken out. For those of you that follow me closely, you already know that this has been a huge winner for a lot of my guys. But yeah, I'm not seeing anything bearish in the stock. I think with any trend, I think you can always expect, red candles, but that's not a time to freak out. That's not a time to sell your position. The absolute key to trading is to maximize your profits. So you should always enter a trade with a thesis in mind and what your expectation is. And all your job is to take the entry, manage risk, and manage to profit. It's that simple. So EHTH has broken out. I think it's one that you can add to your radar. Hilton Group was highlighted last weekend. Again, broke out above $100. We're up at 106. I don't know what else to say there. The chart is so, for me, I love the simplicity of it. It doesn't need to be complex. We can see where resistance is, where we want to enter, and all we need to do is we just need to fine tune what makes a good entry. So there's a few indicators that we use to just say, do you know what, this is a good place to enter, this has the momentum, and that's exactly what we've seen with Hilton. So again, I think at the moment, I think you could probably look to buy any weakness, and I think the thesis is you just have to be bullish above $100 there. Disney has broken out above 150. Looks like it's forming a favourable chart pattern. So again, if Disney hasn't been on your radar, it probably should be. Allstate, I think Allstate looks like it's breaking out here now. One of the reasons this is included is one of my guys has a long-standing position in this. Not everybody likes the momentum stocks that jump 10-12% in a day. Sometimes slow and steady wins the race as well, and one of my guys, Vince, is absolutely crushing this trade, and again it's breaking out. So if you're out there with Allstate, or maybe you like slow and steady, then this might be a stock that fits the bill. It's a strong chart, and the technicals are very much bullish. Aon has broken out above $200 again. This was highlighted last week in my weekend analysis for my group. Again, I think the chart makes sense. It doesn't have to be complex. There are some charts that are certainly more complex than others. Trading is not as easy as this all the time. But I think when you understand that less is more sometimes, and I think with Aon, this is absolutely a place that you want to be looking. Hibbett Sports was highlighted again at the weekend. Now, I was highlighting a potential gap here. Now, it does look like we're stalling a little bit at resistance. Now, if you're out there and you're in Hibbett Sports, I think this is a logical area of interest. And the reason I say that is you don't want to be in this position and you just keep getting further declines and you watch your profit evaporate, etc. So what I would suggest is probably, something you might want to kind of look into is just seeing, what your profit would look like. It doesn't mean that you're saying goodbye to Hibbett Sports if you're in there. All you're really doing is you're saying, do you know what, technically this is a chart. I can do no more with this. I've taken price as far as it's going to go at this moment in time. Let's revisit Hibbett Sports in a month or 6 months, however long it takes, because when you understand technical trading, you can actually take a technical investing mindset. Technical analysis isn't always geared towards short-term trading. I very much class myself as a technical investor, if you like. I'm not a day trader. I'm not a short-term trader. You can absolutely hold positions for weeks to months. That's my preferred approach. Many of my guys who perhaps trade options, swing trade, etc., they obviously use my charting and they apply that chart, and they apply their own strategy or their own method for making money in the markets to the chart. So I guess what I'm saying is you can actually apply an investing mindset to technical analysis as well. It's something I very much advocate. So if Hibbett Sports, hopefully that gives a little bit of insight. GDS has broken out again. Not rocket science here. We've got a line. Prices moved above the line. Now let's just look for the indicators that tell us to enter. That's it. I would be mindful of $50. The psychological round number effect is very, very real. So I think GDS, warrants a little bit of consideration there. Domino's Pizza, somebody was actually asking me about this week. We're actually approaching a logical profit target area around $300. Very similar to Hibbett Sports, where we're just identifying where the resistance is. And if you get the breakout above $300, fill your boots, go and, buy more stock or whatever you're doing. But until then, I think you're actually in an area where I would be considering profiting, or at the very least managing to profit, managing risk, managing downside, etc. I wouldn't be looking for any new entries at this exact moment in time. I think it makes a lot of sense to kind of wait for a breakout. Sonos, this was talked about again at the weekend. We didn't get the breakout here. I was kind of looking for a cup and handle pattern here. Those of you that maybe have an understanding of charting and technical analysis may understand that one. But that's not materialised. Price has fallen away. But I think with Sonos, I think if you were to set an alert for maybe $15.50, $16, I think that would be a logical area if we get the rebound in price and we see Sonos move to the upside. I'm personally a Bose man. I've got Bose all over the house. But, Sonos, very close second from what I understand. Apple, I think Apple speaks for itself really. The trend has been utterly incredible. This is one that many of my guys have done ridiculously well on, stock and options, and it's still moving. We've obviously had a bit of weakness recently, but again, that weakness looks like it's offered a bit of opportunity. So I think Apple is one. If it's not on your radar, don't be scared of these stocks that are trading at all-time highs. All-time highs are definitely a good thing. Because when trends start to move, the only thing they can do is create new highs, and that's what creates profit. So yeah, hopefully that one makes sense to you. Zscaler, again, this is one that's moving beautifully. I mentioned this one back at the start of October and said, look, potential bottom here. It's exactly what's happened. This is a game changer for a lot of my guys. It's moving. Profit targets on this one, very, very difficult. I think what you have to do is really just manage risk. Use some tools that help you to manage your stop loss so you can extract as much profit as possible. There's quite a few tools that you can use there, but Zscaler, absolutely bullish on this one at the moment. TJX, for full disclosure on this one, I have a couple of positions running on this. It's doing beautifully well, and I'm highlighting this one. We've had a breakout, or it looks like it's wanting to get a breakout here. So I think with TJX, if it's not on your radar, I think again it probably should be. I feel like I'm using those words too much. Let's try and switch it up a little bit. Amazon, breakout above 200 MA, bullish, profit target. Any concerns that I've had in the past are now starting to disappear a little bit. I think the words that I used a couple of weeks ago in my social media analysis was, look guys, I find it very hard to believe that the market is making new highs and we don't have participation from Amazon. I think what we're seeing now is exactly what is expected, and hopefully Amazon can now start to close the gap back to that $2,000 level. Again, Goldman Sachs, again, this is what another trade alert looks like. So for those of you that maybe don't know, my guy's got a trade alert in here, just to say, look, we might be getting a breakout here. I cancelled the trade alert because we had resistance in financials. It looks like financials may be breaking out again. Financials break out, Goldman Sachs is going to get taken along for the ride. So I think Goldman Sachs, again, I think there's a very clear risk to reward proposition there. Trade Desk has been an absolute game changer again for many of my guys over the last few weeks. So yeah, Trade Desk, I think if you're out there, you're in it. I think $290, maybe $280 actually, $280, $290. I think those are logical areas of interest where you might want to just kind of reevaluate your position. PayPal has broken out, and we're looking like we're above the 200 MA now. When we consider that iPay is moving into an area which we would deem to be showing a little bit of strength, it makes common sense would dictate to us that PayPal is an area that you might want to consider. So PayPal, again, get that on the watch list. Home Depot, there was a lovely chap on StockTwits, I think yesterday, saying that this chart was not my finest chart. Let me actually, that's what I think the chart said. It didn't have the Fibonacci. Basically, my chart to social media on StockTwits basically just said, look guys, if price is going to reverse, this would be a logical area for it to do so. Lo and behold, you know, the chart again doesn't have to be complex. Yes, we use tools to facilitate entries, and Home Depot is off and running. Arrowhead Pharmaceuticals. I don't know what to say about this one really. What I will say is, one of my guys, and I'll show you the chart that I sent him, I think it was around 6-7 weeks ago, but this has been an absolute home run. One of my guys in particular has made a life-changing sum of money on this, paying off cars for family and daughters taking their first trades and paying off their cars as well. Couldn't be happier. Absolutely love to see it. Incredible success story. I'm asked a lot where it's going to go. Okay, now I think what we can do is, when we get parabolic moves, you absolutely need to manage the trade to profit. Now, we just need to look at maybe something like BYND and see what happens. When you get irrational momentum behind a move, we can see stocks explode from $40 to $200. It happens. Now, I'm not saying that's going to happen with ARWR, but what I would be tempted to say, and I wish I was in this position to have that problem. However, what you can do is just move up your stop loss in a strategic way, because if you get further strength and you get that insane move to the upside, you want to be participating in that. So when you get a move like this, all you're essentially doing is you're just moving up your stop loss as the trend develops. Now, eventually you're going to get stopped out, but you need to be comfortable with, I suppose, the profit that you would have should your stop loss be triggered. But at the same time, you don't want to just say, oh, the price is so high, I need to sell here. That's not the right approach. Over the longer term, it's actually an approach that will not serve you particularly well. A lot of people think that profits are never a bad thing, and I tend to agree to a certain extent. However, the absolute key to trading is to maximize profits. It's not just profits. You need to maximize profits. You need to have the risk to reward proposition in place as well. So I think if you're out there with the RWR, I think you absolutely need to just manage this to profit. How far it goes, nobody knows. But the one thing you need to be comfortable with is, one, where you might get stopped out, and you need to be able to say, thank you very much, Mr. Arrowhead Pharmaceuticals, let's go and find the next one. Because, one thing's for certain, the stock will pull back at some point, but you don't want to be one of these guys that is in there and you've still got your stop loss sitting down here, and then you get a scenario like a BYND where price tanks $150. Definitely don't want to be in that camp. So manage the profit. How far it goes, it's going to be the luck of the draw. But congratulations to absolutely everybody that's got in on this one. Beautiful. AWK looks like it's breaking out. One of my clients is very much looking to get in on this one. I think there's a logical $10 upside there for American Waterworks. XLNX, again, this looks like it's wanting to break out here. I think what I would be looking to do, I just maybe want to see that 50 simple moving average clear before taking any entries. But I think the chart at the moment, it's been beaten down. I think that there's no two ways about that. But it may just be one of those stocks that it's taken its beating and it's time to kind of rise from the ashes. So let's see what happens with XLNX. Guardant Health, I think, very straightforward chart for me. I think you just have to be bullish above this 200 MA and the 38.2 fib level. I think those are key areas for the stock. So definitely bullish above this level. Below it, not so much. Twitter, lots and lots of messages and emails about this one on all my social medias. I think there's a case to be had here that we're seeing an island reversal, exploding bottom, which always makes me laugh. For those of you that understand my distress when I spent winter last year in Mexico, you might find that one funny. But for an island reversal, what you'll probably get is an overnight news event with the stock and a gap up, and then you'll see the stock. So, that makes sense to me. Again, there's a potential there, maybe a cup pattern, very subjective looking chart, but there is a case to be had here that Twitter is maybe finding its bottom here. So as for profit targets, very, very difficult with this one. I think, again, if you're in there and you're in Twitter, you've got this bottom. I think all you need to do is just manage to profit. You don't want to be sitting there taking a loss if you get another reversal. INSG looks like it's breaking out. I think there's a logical 15% upside here with INSG. Not a stock that I would ordinarily look at. However, one of my clients was asking me this week about it because it's a long-standing position that he's in, doing very, very well. And as we can see, a couple of areas of interest. I don't know, you might want to consider that one. I think we've got AbbVie here. I think with biotech in particular, I think biotech is still an area of interest. Again, this is one quite a few of my guys have been in since this breakout down here, moving along beautifully. Again, it's all about extracting as much profit as possible from the trade, using tools like this that help us to manage to profit. So again, if AbbVie hasn't necessarily been on the radar, then certainly add it. So that's a lot of the charts, as I said. Feel free to subscribe to our channel. I think we try to upload once or twice a week. If you are wanting to stick around for another minute and hear a bit more about our Black Friday promotion, maybe just let me introduce myself. I'm Sam, and I run honeystocks.com, super well-known trading website. And I'm often asked the types of traders that I can help. I think if you want to get away from day trading, maybe if you are trying to fit trading around a career or a business, maybe if you just want better consistency to your trading, maybe you want to obviously learn and not just follow others, etc. I think those are the types of personalities, people that I can tend to help. Now, the really cool thing about what we do at honeystocks.com is every single trade that we have posted to our clients in our community over the last 2 years, I log on our website for complete and open transparency. I don't know anybody else that does this. I have surveyed so many websites, and I don't know anyone that does this. It conforms to the code of ethics that I need to follow with the CMT Association. So I display the date, the stock, the price that I've posted the chart and recommended at, and what that stock has then gone on to do. Now, that's something that I think you can go on and you can obviously scrutinize, and you can find out if you want to join our group. But this is the offer that I'm doing. Now, it's Black Friday offer. It ends on Friday, so as soon as it hits midnight on Friday, that's US time, by the way. As soon as it hits midnight US on Friday, the offer will end. Black Friday, $500 annual subscription. With that, you get full access to all our trading ideas, our scans. You will receive our premium weekend charting analysis, which you've just got a taster of. Normally with our weekend charting analysis, it's usually 10, 12 stocks, and it runs, the analysis is really maybe a 10, 12 minute video. You get 1 year access, obviously, to our trading community. I also provide charting requests, friend referral bonuses, and if you sign up before Friday, we're also giving away full access to our technical analysis program, and we charge a lot of money for that. But this is the Black Friday promotion. Now, just to touch on the charting requests, and I'll give you a couple of examples of that. I want to actually maybe just touch on, this is another trade alert. This is what one of our trade alerts looks like. So feel free to pause the video and have a look at that. But in addition to this, whenever one of my clients or my group are unsure about a chart, I will ask them to send me a message via my app, and let me see what they're seeing, and I'll give feedback on a chart, and I'll point out anything. So ENPH is one that's been discussed. Many of my guys are doing very, very well on this. We touched on Arrowhead Pharmaceuticals earlier. Again, one of my clients was asking for the chart on it because they were thinking about exiting their position. This was the chart that was provided, and I'm not saying that I called the move that had, absolutely not. But what technicals do is they allow us to stay in a position and identify the areas. So ARWR, we've had Zscaler recently as well. So there's been a lot there. And all you need to do is jump on to our website, honeystocks.com, click on the Black Friday sale event, and all you need to do is just click there, register your details if you wish to join, and we will get all the details over to you, receive confirmation that you want to join, and we'll get you integrated to our incredible group. So if you've stuck around to the end, thank you very much for watching, and who knows, maybe we'll welcome you to our group soon. Thank you very much.